Hi, I'm James Dunn. Welcome to the Inside Network.
Joining me today on INDepth is Caroline Cai, Chief Executive Officer and Co-Portfolio Manager at New York-based Pzena Investment Management. Welcome, Caroline.
Great meeting you, James. Thank you for the opportunity to be here today.
Real pleasure to have you here. Caroline, I'd like to start off talking about value in the sense that there are so many different forms of value investment around the marketplace, or things that purport to be value investing. Take us through Pzena's idea of what value investing is as a style and a philosophy.
So to us, value simply put means you want to buy a good business at a low price. And now most people define good businesses along three dimensions. One, high profitability, we look for that. Two, good balance sheet, we look for that as well. The third one being earnings stability or visibility. If you have all three, it's a fantastic business, but rarely do you get to buy it at a low valuation. So if you have the first two characteristics, but for some reason, earnings have declined in the company, that may present the opportunity for us to buy a good business at a low valuation. The key to that is to understand what happened that's caused the earnings decline, and do we have a view on how the management may react to what's going wrong and eventually improve the underlying earnings power of this company. If we're paying a low price for what that eventual recovery looks like, we think that's a great value opportunity.
Let's take one of the mega themes of the moment that prevails in the market, artificial intelligence. Does AI and the fervour for it represent a risk or an opportunity to a value investor?
Well, any change is a risk and opportunity at the same time. Now, the reality is things have always been changing. Technology is an area that we started was mainframe, PC. We had the advent of the internet, mobility, cloud. AI may be bigger than anything that's come before it, but the reality is good businesses adapt to what's happening in the world. They adjust their business models, they leverage what they're good at, and potentially come out of the other side even stronger. So what we see is if you have the right brand equity, you have the scale, you have the know-how to improve your value proposition or competitive position in the industry, technology oftentimes is an accelerator of improvements as opposed to an impediment. So I don't think the issue is things are changing. The issue is always how does the change impact this specific company and what's being mispriced in the market in terms of the opportunity and risk this company is exposed to.
What about something that's both a theme and a market? China. It's been rarely out of the news in the past decade, under the spotlight all the time. What's the view at Pzena on China? Do you think China represents good value?
Definitely today. Now, that's not always been the case over the last 10 years. And you can see how sentiment has shifted on China from very positive to people calling it uninvestable. Whenever somebody says something is uninvestable, all that really means is there's no price at which they would be willing to invest. That's an interesting starting point from a value investor's perspective, right? Now, if you look at China, it's underperformed by over 55% in the last 3 years versus the rest of emerging market. That's a very provocative starting point in terms of the price you have to pay. And by the way, China has real diversity in terms of the businesses that you can expose yourself to. Not all businesses in China is exclusively exposed to what happens in China, but they're getting penalized the same way as a business that may be 100% domestically focused. So one of the names that we're very excited about in the portfolio is Haier Smart Home, and this is a company that makes major appliances, so washer, washing machines, refrigerators, cooking, air conditioners, and so forth. In fact, they actually own the brand Fisher and
Paykel.
Paykel. I always got the second part wrong. Fisher and Paykel here in New Zealand, even though it's a Chinese company. They own the General Electric branded appliance business in North America and the rest of the world. So over 50% of the company is outside China. They've done a really good job with innovation, moving things through the channel. They've been gaining market share in North America. They're losing money in Europe today, which they're working hard on fixing. And because of the China penalty, you're able to buy a global industry leader who's highly profitable, is on the path of market share gain at a relatively low valuation. So we're very excited about that.
What about another mega theme, energy transition, which is so broad? So how does a value investor think about a concept as broad but as important as energy transition when researching potential value stocks?
Yeah, sure. So I mean, one of the things I should mention earlier is, being a value investor means you have a very long time horizon, because long businesses takes time to turn around itself. So we generally have a 3 to 5 year time horizon. And if you think about these mega themes, they're really going to play out over a very long period of time. Energy transition, the world is on the path of decarbonizing. And over time, traditional fossil fuel will become a less important part of the energy infrastructure. And that creates opportunities and the risk for all businesses in the market. The most important thing is actually understanding how this company is going to evolve in terms of its business models. So if you look at what we own in our portfolio, we have companies that are really taking advantage of the energy transition in terms of bringing new products and services to the market. We have companies that are evolving their existing business model to better adapt to lower fossil fuel consumption, to more renewable production. And then we have companies that we think is completely misunderstood in terms of their exposure to the energy transition. Michelin is a good example of that. It's a tire maker. As we move to more electric vehicles, we'll need, first of all, the tires wear out faster than they used to, so you'll need more tires. And second of all, the requirement for tire goes up significantly on an EV versus a traditional gas engine car. That's just pure physics. So that really favors someone who has a very rich product mix, who extracts a higher premium, higher profitability from that higher spec tire. And we see the electrification trend really benefiting Michelin over the long run in terms of the profitability of the business. But when you say auto, everybody thinks, wow, you're exposed to the potential electrification trend. It's really misunderstood in that sense.
What about specific stocks? Could you give us an example of a stock that you hold in Pzena's Emerging Markets Value Fund that really exemplifies the characteristics you look for in a value stock?
Sure. So one of the names we added in the recent period is Credit Corp in Peru. So this is a developing market that's gone through a fairly difficult period during COVID, but also experienced some political instability in more recent period. Credit Corp is the dominant retail and commercial banking franchise there. It's an underbanked market with good demographics, so over time, banking service demand should be growing. Credit Corp has a dominant position in terms of the quality of the franchise, the efficiency of their operations. So over time, we really see them continue to gain market share and grow the business in a profitable way. On top of that, they've been the leader in investing into the fintech channel, so creating a digital banking model. It's money losing at the moment, but should be on its path to profit making as it gains more scale. When you wrap all this together, it's a really exciting company that's exposed to all the structural things people like about emerging market. On the other hand, we're just in a tough spot in Peru, and there's some pain they're bearing based on the investment into the fintech channel. So that's creating a unique opportunity to buy a high quality franchise at relatively attractive valuations.
Caroline Cai from Pzena Investment Management, it's been a pleasure going in depth with you.
Oh, it's a pleasure to be here. Thank you very much.
Thank you.